Hello, welcome. Uh, this a short recap on this week's trade. Okay, so I'm going to go through the trades that were taken this week, and then we go through the thought process so that we can learn something for future use. So that next time when you see this kind of setup, you have confidence to take such a trade. Okay, so first of all, I'm going to start with AUD CHF and then a bit of BTC. Okay, bit of BTC, Euro GBP, AUD CHF, and USD ZAR. So those two, I'm going to spend a lot of time there because it's a trade that I held for a very long time. Okay, so AUD CHF. First, okay, so I think I had a setup from here. First of all, I had a setup, a very long-term setup. I did it on a weekly chart. Yes, around this area. Okay, so I marked this low as liquidity. Mark this one as liquidity. So I expected to see price trading to this base. Okay, so we have two candles here. Okay, so the base is the middle. That is a hidden demand, right? So if you switch to a daily chart, you might see a candle around that place. Yes, so around this place was where I was expecting price to reverse. But I didn't take this trade. Okay, so now what happened was that around this area, right? So we saw price pushing up, creating series of higher highs and higher lows, higher highs, higher lows, higher high, higher lows, and this last higher high. So we got a failure swing here. Okay. Okay. This swing failed to create a new high. Okay. Failed to create a new high. So since it's failed to create a new high, right? Look at the volume of the highest candle here. It is low, right, as compared to the volume on this particular high. Okay, so there were high volume here and less volume here. Again, so the expectation was that we were going to create a new high. So since we weren't able to create a new high, that is one first signal. And then we broke structure to the downside. Okay, so we had a structural break here. Structural break here. Okay, so we broke structure to the downside at that particular level. Okay, so we broke structure. So we could have taken this particular trade. This is a trade I didn't take. Okay, I didn't even see it. Okay, so this is going to be again the trade around this base. So because if you switch to a lower time frame, this double maru is going to be what? A base. Okay, price traded into it and we had this drop. Okay, so but one trade was taken from the 1 hour and 30 minutes chart. Okay, so we broke structure, we retested the level, so you can see there was a base drop. Okay, we have a significant break here and then a retest. Now here, when I change the line chart and align the trend line, okay, now we see the trend line. I see a Quasimodo level here. Okay, so one, I was expecting price to enter here. So this is something. I was expecting price to enter here. And actually, expecting price to hit this Quasimodo level. Okay, and again, when you look around the trend line, you are going to see a drop, base drop, drop, base drop. That was around a significant support. Okay, so we have a significant support around this level. So if you change to a line chart, you realize that there was a sharp move around this place. So we have a significant support and a base around it. Okay, so when price kept reacting this way, right, I adjusted my entry to around this, to what it was. Okay, and then pick it from the wick here, and then I targeted this area, not this low, but around this area because of this candle, which I thought was going to reverse, was going to give us a pullback, but yes, it traded below it. All right, so now again, during this, okay, I started trading the trading range. So here we can talk about the trading range. The market hit this and created, so for instance, we broke. Okay, so we talk about the trading range. Now we broke structure here. So this was our trading range, this high, and this low was our trading range. Okay. So now this one couldn't create a new low, right? So we're looking at this whole area to be the trading range, didn't create a low. So if you look at this downtrend, okay, so if you see high, low, high, low. So now we have a new lower low, which is this. So our trading range is going to be this. Okay. So our trading range is going to be this high and this low. Okay. So now we expect price to come back into the trading range. So inside the trading range, after we broke this particular low, sorry. So this first trading range is, I'm sorry. Okay, so the trading range is this. It is this and this. Okay, so we broke this low, right? So now our trading range is this and this. So inside this area that broke the low, we want to look for what? Price to go back into the space. Price to go back into the space. So inside this area, we have to look for places to sell. So we have a Quasimodo level, we have a drop, base drop, that is a significant low. So here, I took it first at this particular point, and it is in line with the trend line. So that was it. So now here, we broke this particular low. We broke this particular low, right? So we have a new trading range. Okay, price broke it with strength, never went up here. Okay, and continued. We had a new trading range, so we didn't have a trade. Okay, we have a new trading range. Here we broke it with strength and momentum. We never went inside it. Okay, so when, right, and then we broke this particular low, this one, so we created a new trading range. Okay, created a new trading range, which is this high and this low. We broke it, so a new trading range. So price came back into the trading range, and this would have been an entry. Okay, so it's going to be an entry. So assuming this is it, we traded it to the downside. Okay, because you can change it to a 5-minute chart and then see it clearly. Okay, so as you can see, we traded below this low, we broke this low, so our trading range is going to be this and this. Okay, so from here we want to see price come back into the trading range. So where within the trading, we had a Quasimodo level here. Okay, but we have a high, a low, a high, a lower low. And this Quasimodo level has already been what? Hit. Okay. So now that you have broken, we have a drop, a base, a drop. This is a base. Okay. So now price reacted to this base. Reacted to this base. Okay. And again, the base is a candle with low volume. Okay. So now we reacted to that. Yeah. So after reacting to this, we broke this low. You can see we broke this particular low. Okay. So this is where we, I picked the trade. As we broke this particular low, we know the trading range is going to be this low and this high. So the space between this and this. So within it, what are we looking for? Okay, so inside this range, we have again a Quasimodo. Okay, we have the Quasimodo. This is the Quasimodo level. High, low, higher high, and lower low. So price is coming back into the trading range and hit the level, and then we saw a drop. Okay, we saw a drop. We got a second chance here. This might have taken a lot of fast out, but right, we had a right reaction, and then this is it. So this is the trade. This was going to be this. Okay. Up to here. That's a very good one. Okay. So now again, we broke this low. So the new trading range is going to be the lower low and the lower high, which is this. So remove the box. Move the box. Okay. So within the trading range, if you change, you see that we have okay. So now if you change to 15 minutes chart or a 1 hour chart, even a 1 hour chart, okay, you're going to see this drop, base drop at a significant support, right? So price came back into this trading range and then hit this before giving us this particular reaction. So that was it. Two trades, this and this for all CHF. Okay, and you know that the thought process was that we failed to make a new high, we broke structure, we retested, and then gave us a confirmation of a down move. Okay, the next one we have USD card. So let me see what I have in my list. Okay, odd USD. Okay, so this is odd USD trade, right? Okay, so we broke the trend line. We broke the trend line after creating a higher high, and so now with this there was no structural break because this is a structural point, right? But we broke the momentum trend line. Okay, meaning that we are moving to the downside. Okay, so here you have a drop based drop, okay, which is around a significant resistance. Okay, so we have price rejecting this level once, 2, 3, and then creating this base before breaking it. Okay, so that's the area I was looking at. Okay, so now we got a reaction from there. Okay, and then boom to the downside, take profit around this area. Okay, so from that one, and BTC, okay, Bitcoin, we broke this momentum trend line, right? But not just a momentum trend line, we also broke structure. We also broke structure here. So it's high, lower low, lower high, lower low, lower high, lower low, and higher high. So you have the Quasimodo level here. Okay. So price came back, reacted to the level, and then boom, take profit was 1 here and then 2 here. Okay. USD CAD also, yes, the entry was around this level. Okay, entries were around this level, and then I wanted to sell here too, but we got a small reaction, and then boom, market went continued to the upside. So this is it. The buy was here. Okay, the sell also, we got there was a reaction. Okay, I think, let me check that one. USD CAD. Okay, so yes, so buy from here. Buy was from here. Up to here, where I got the sell, but the market couldn't move to the downside, so we hit stop loss. Okay, so that was for USD CAD, BTC, and next we have Euro GBP. Okay, so with Euro GBP, we are on the downtrend. It was a downtrend. Okay, I think Euro GBP, yes, was a downtrend. Downtrend. Okay, so this again comes back to the story of what the trading range. Story of the trading range. So looking at this down move, right? Break of structure back into the trading range, break of structure back into the trading range, break of structure back into the trading range. Okay, here the whole trading range is this. So the whole trading range is this. Okay, back into the trading range, high, low, then we broke structure. So the new trading range is this. Okay, now there was instant loss of momentum after we broke this particular low. Okay, and then the market started going up. So we knew that we are coming deep into the trading range. Okay, the safest way to trade is to trade from the trading range outside the trading range. It's difficult to trade inside the trading range unless you have good confirmation. So for instance, here we broke structure here. This is where we had the first break of structure. So this is how the trade started. There was the first opportunity here. Okay, first opportunity here. Now, here we got a break of structure. Okay, we got a break of structure here. And now, if you align this to this trend line, okay, this low to this low, and then you look inside this, right, you realize that there's a QM level here. 1, 2, 3, 4. High, low, high. Okay, lower low, higher high. Low, high, lower low, higher high. So here it's going to be what? The entry. So now the trend line. Okay. All right, so we have a trade around this level, and opposite that Quasimodo level, we had what? A base. So you can see this base here. Okay, so that's where price reacted for the first time. And then this is the main trade. Okay, still on the trend line. Okay. Usually during the trend line, you have to use a Okay, you have to use the line chart. Okay, so we're looking at the same scenario again. Okay, so we had what? Strong support and resistance. So this is a strong resistance level. Okay, and you can see it well from the 4-hour chart. So you have a strong resistance here, and opposite the resistance, you have a rally base rally. So this area is going to be what for an entry. So this is the area we mark for. You mark for the entry. So mark this area for the entry and can look into it on the smaller time frame. Okay, so looking at it from that smaller 15-minute time frame, you can find that there's this candle here. Okay, this candle here, this is a demand candle, okay, or no supply candle here. So this demand zone, okay, where is this base? It's good because it's at what? It's within the base that we marked. And again, it has low volume. The volume is lower than the previous two volumes, okay? So the volume of the previous two candles are higher than the volume of this particular candle. So this is a good area to be looking for a buy. Okay, so you see that is where price reacted to. Okay, so that was for Euro GBP. Okay, and that's USD CHF. Okay, so USD CHF was a long-term trade. Okay, so right, so with this one, okay, the whole thing started from down here. I still have some of the trades. Okay, all right, so okay, so got this. Now I thought it was going to continue to the downside, but went up, and then we broke structure. Okay, so after this reaction, we broke structure on this move. We traded above this, so this suggested that we are going up. Now, the main issue was somewhere here. Okay, it was somewhere around this area. Okay, where we broke major structure. So in this down move, we broke structure here, and this was a pullback into what? A good area. Okay, so now what happened was that we had a strong resistance here. Okay, and then opposite it, we had a rally base rally. So one, okay, so that was the reaction, but now we are here. So after this break of structure to the upside, suggesting that we are reversing this move, suggesting that we are reversing this down move. Okay, we are looking at what? We saw that there was a break of structure here. So this is the trade. Break of structure around this particular level. Okay. Broke structure down here, right? And so we have a high, a low, a higher high, and a lower low. We realize that this area, there was never a pullback to mitigate this area. So this is an empty area. You can refer to the mitigation and trading range video. Okay. So, but opposite this Quasimodo, okay, at the Quasimodo level, there was this candle. there was kissing candles. Okay. So we have a drop, a base, a drop. So when you switch to a smaller time frame, you are going to see that there's a base there. So you can see we have a base. So you can look into this base and get the level. Okay, you can go deep into this base and get the level. But significantly, the base is opposite the Quasimodo level. So the reason for taking this particular trade, okay, for taking this, okay, and holding up to this. So currently, there are two areas that I have to be looking at. I'm looking at this one and also looking at this area. Okay, because one, liquidity has been built around this level. This also is another form of liquidity, right? So you can either react from here or react from here, but wait for to see how price is going to behave around this level. Okay, so this was where the entry was where the entry was. Okay. So this was another entry on the 1 hour chart. Okay, somewhere around this area. Okay, I think somewhere around this area. Yes, we took another sell. So that is it for, and the same thing applies to USD. Okay, so USD, yes, this area. Okay, so we have a low, high, low. So we have this as a trading range. Okay, so we are looking at this zone. Looking at this zone as the structure. So we broke this low. Looking at this level, because this is where we had a last break of structure, and wasn't expecting deep retracement, but price still came in deep because of this liquidity that has been built here. Realize that here price never went to touch this area. Okay, so this area was never touched, and then it came down. So now you can see that here there was a QML. QML was formed here, right? High, low, higher, high, lower, low, broke structure here. But because there's still liquidity zone above it, a place that has not gone up to mitigate. So this became what? A diamond. Okay. So now reacted here and boom. So this is where the first trade was taken. Okay. So this area was also not mitigated. So the reason why, yes, it reacted from here. But I think there was a call that I made around this area where we had a small reaction, but price didn't go to the downside. Okay, so that one was on the 4 hour chart. Around this area. What was the trade? Okay, so this was it. This level. Yes. Okay, so we have a strong support that has been broken, but opposite it, you have what? Drop, base, drop. So the reaction. So I did something like this. Did this. Okay, so this is what I did, right? But yes, there was a reaction, and then this one held, and we are here. Here, I took a sell here, but I don't know, I couldn't stay inside that particular trade. right? I think we had this one, it traded inside, entered on this level. This one entered to it, came down and came here and then started going up. So I closed the trade. Okay, so sometimes you also do close trades. I close this particular trade and then we had this particular reaction. Okay, so this is all for today. You can ask questions if you have any. Okay, lastly, I think there's one pair that I've not looked at. That is GBP JPY. GBP JPY. Okay. So GBP JPY for our chart. Okay, so this was it. As you can see, that we are going to take this low, right? We reacted to this area, same principle, the trend line, reacting to that zone, and then boom, to this level. We are looking at this level to see more reaction. Okay, thank you guys, bye.